I think it is very clear that the price of Bitcoin is going up, regardless of who wins. I actually don't think, and I'm going to have people probably tweeting at me after this about this, but I actually don't think it's that correlated to. I mean, it is correlated, but I don't think it's the causation here is a Trump presidency. I think more broadly, if you have a long-term outlook, like everything from a macroeconomic perspective is signaling the likelihood of increased exposure to risk assets for large investors.
Welcome in, everybody, to another episode of Coinage as we are on election eve here. The election very close and obviously pivotal for where we go with the price of crypto and the price of Bitcoin. A lot to dig into today. And of course, very happy to have back on the show with us today, general partner at Dragonfly, Rob Hadick, back on Coinage with us. Rob, GM to you, sir. Thanks for hopping on.
Yeah, Jamie, to you, Zach. Thanks for having me on again.
Yeah, we've got a lot to dig into today. Obviously, Trump versus Harris, the talk of the town. Of course, there are other races to discuss when it comes to what we're going to see play out. But I'm right now just watching the price of Bitcoin here as we are hovering below $70,000 and a lot of price calls to dig into. Of course, a lot of meme coins to dig into as well, as we saw Peanut shouted out by Elon Musk. We're going to get into that in a second. But first, want to give a shout out to our sponsor on today's show. Of course, our friends at Akash Network. I'd be remiss if I didn't give a shout out to them. Today's episode is brought to you by Akash, the world's premier decentralized compute marketplace. You can check out Akash to buy and sell computing resources securely and efficiently, purpose-built for public utility at akash.network. Rob, I want to start with your thoughts on where we go from here because no one really knows. It seems like a coin flip right now in terms of who wins this election. But you've got a couple different price calls. Standard Chartered saying that it could go to 75K if Kamala Harris wins, could go to 125K if Trump wins. You got Bernstein saying that regardless who wins, you're going to hit 200K on Bitcoin next year. What does Rob Hadick say?
Yeah, so I'm hesitant to give an exact price, but here's what I will say. I think it is very clear that the price of Bitcoin is going up, regardless of who wins. The market is actually not pricing in that big of a move. So if you look at the vol curve today, it's roughly 80, I think, as of this morning. It's pricing in on the option side about a one-day spot change of around 8% on the election day, and also following that, which we have FOMC later this week. I think I have heard quite a bit of talk from the desk and actually from a portfolio company of ours called Arbulos that there has been a lot of bullish betting over the last couple of weeks, but we've now seen those some of those funds come in and they're really hunting for downside protection. So buying things like puts, really trying to potentially extend the maturity window a little bit. So if there is an uncertainty around results, and people are just a little bit more cautious. But I think that volatility early on it's not expected to be particularly big this week. But I think if you look out and you zoom out about what's been happening from just a macroeconomic perspective, from what's happening from a regulatory perspective, what's happening in the courts, and from what we've been seeing from just a liquidity into the market perspective, and we can talk about the ETF flows. Like I think it's clear, like Bitcoin's going up, crypto's going up, and we can't be stopped.
Yeah, I went a little bit out of order because that's how much elections are top of mind right now, because that's what we were originally going to discuss was flows, but we'll flip the order just because. And I was looking at the headline, as I said, Bernstein basically saying that, look, regardless of what happens here, we're going to be fine in crypto land. The quote from that article, the Bitcoin genie is out of the bottle and it's hard to reverse this course. Our Bitcoin price target for the end of 2025 remains $200,000 independent of the election outcome. So says Bernstein. And to your point, Rob, I think, a lot of what we've watched play out this year, I don't think you can say necessarily changes depending on who's in the White House, just because so much of it has been, ease of access to investing in Bitcoin via these ETFs. That doesn't change post-election. And, obviously there's still a lot to be decided when it comes to stablecoin legislation and other things. But is there one thing that stands out to you as categorically different, aside from maybe SEC pressures beyond Bitcoin and everything else beyond Bitcoin? What do you think is kind of the biggest hang-up that people are focusing in on?
Yeah, so there's definitely, I would say, things that have been said that are very categorically different. So if you look at what the Trump campaign has said, they've said things like there'll be a Bitcoin reserve. They've also talked about trying to do some things around potentially protecting Bitcoin miners through the legislator, stuff like also like even like free and Ross Albright, things like that. There's clearly been they've wanted to put their arms around the industry and some of these like more like niche topics. What that means in actuality relative to Kamala, it's not unclear to me. How far along we get. I think some of the key things, like a new SEC commissioner, that seems to be likely to happen regardless, and hopefully the new SEC commissioner is likely to be more a lot more friendly to crypto regardless. I think one of the super interesting things here is that you've actually seen quite a bit of movement, and you're showing the poly market right now, and 59.41 for Harris. Over the weekend, we got these polls from Ann Seltzer, who is considered by Ned Silver to be the best pollster in America, in Iowa, specifically for her state, from the New York Times Siena poll, who I think Nate Silver also thinks is the second best pollster in the country. And both of those were a lot more they were a lot more friendly to Harris than we had seen in the past, and we saw because of that, spot like Bitcoin actually traded down over the weekend, but at the same time, options pricing was going up, and so we had both call options but also more demand for puts over that period of time. And so I think what you've seen is that people are still very bullish around regardless of if it's more likely to be Harris or more likely to be Donald Trump. They're very bullish around that long-term price action, but they, at least for the majors, but they're just an expectation of more volatility, I think, in a Harris presidency.
Yeah, I mean, I think that people are bracing for a lot of that, and I think that's partially why we've seen the poly market odds swing so much, like you said, after that poll came out. If you think about the pricing on all these things and the way that people do want to hedge, there are a lot of different ways to play the Trump trade, depending on how you want to do it. I think back in like the traditional equities land, you've also got DJT if you want to play it that way. And we've seen huge swings in that stock, down by about 43% over the last 5 days. And, that's another one that people are saying is kind of binary. It's either up post-election or I saw someone saying it goes to zero. So like there are bets like those. And I'm looking at that as a proxy in terms of where I think the market is at, just as you could a poly market. But a lot of this is kind of getting complicated in terms of hedging and all of that stuff back and forth. So maybe it is good to turn, Rob, to the fund flows that we have been watching play out too, because that's something that is tied up in all this. If you even ask the people behind the CoinShares report, James Butterfield putting this out, as they always do, looking at where money is flowing into and out of crypto asset investment products. And the number this past week, 2.2 billion in terms of all the crypto investment products, the majority of that, if not all of it, essentially, coming into Bitcoin ETFs, since they saw $2.2 billion worth of inflows last week. And, Rob, again, I don't want to say this is all due to where the market thinks Trump's odds are, but that is a pretty massive snapback after a little bit of a tick lower last week, or the week before, I should say. I mean, what do you make of kind of, I guess, how much this has changed and not changed throughout the course of the year? Because, this is billions and billions and billions of dollars flowing into Bitcoin now via these ETFs.
Yeah, I actually don't think, and I'm going to have people probably tweeting at me after this about this, but I actually don't think it's that correlated to. I mean, it is correlated, but I don't think it's the causation here is a Trump presidency. I think there's a lot more going on, which is right now over the last couple of months we've had a significant increase in liquidity and quantitative easing picking back up. So there's just more liquidity going back into the market. There's the Fed has continued to bring down rates. The FOMC is meeting again later this week. There's an expectation of another 25 pip rate cut. There's if you're following the earnings season at all right now, it's going pretty well. There's, I think, a real expectation that we are kind of past the concern of a recession. And we've seen, I think, a lot of pricing in this idea of a soft landing. And so there's a lot of things happening from a macroeconomics perspective that matter for the price of Bitcoin and for the price of big large cap risk assets that are also around this kind of Trump seeming way more likely to get elected a couple of weeks ago, to that coming back down. To, you mentioned poly market. Poly market was I think was at the high, was close to 67, 68. Then was back down to 54 over the weekend, and now it's you just said 59. I think Kalshi had Trump at one point flipped that Kamala Harris was favored over the
Hmm.
weekend, and so we've seen this kind of move around over the last couple of months. But I think more broadly, if you have a long-term outlook, like everything from a macroeconomic perspective is signaling the likelihood of increased exposure to risk assets for large investors.
Yeah, and I think we've seen that too. I mean, there's so much to watch with this election that I almost even forgot that we do have the Fed decision coming up this week as well. When you talk about odds there, it is essentially right now looking like a 99% chance that we do get a quarter of a basis point cut, or a quarter of a percent cut, I should say, 25 bips there. It wasn't too long ago that people were expecting perhaps another 50 basis point cut, but that's the way that it's shaking out right now, at least when it comes to people trying to figure out what Jerome Powell and co. will do. Regardless, though, that's the traditional market, and that's the way that things are shaping up in the traditional markets. Over the weekend, though, there was a little bit more than just traditional markets to watch. There's also meme coins, and you and I really haven't had a chance to discuss too much about meme coins, but it is an important piece of our crypto economy, shall we say. And one of those big stories was Peanut the Squirrel. For people who don't know about Peanut the Squirrel, essentially this New York gentleman, family man, who has a bunch of rescued animals, had a squirrel that he housed, and an agency in New York basically said you can't have a squirrel, and went there and raided his house. And the reason why we're mentioning this time around, Rob, is because it was quite controversial in the way that Elon Musk and even Donald Trump were tweeting about it, talking about it. Government overreach the day before the election. So much to discuss. And they also had him on TMZ. Just want to play a clip of the owner. And again, this isn't funny because they killed a squirrel, but it did launch a meme coin. And so we'll just play the clip of the owner of Peanut the Squirrel on TMZ as he found out that the squirrel himself was euthanized. Take a listen.
We just learned that they have euthanized Peanut.
And the raccoon as well.
And the raccoon as well. I am so sorry. This must be really difficult for you.
It not only tears my family apart, but Peanut was the cornerstone of our nonprofit animal rescue. And 10 to 12 DEC officers raided my house as if I was a drug dealer. I was sat outside my house for 5 hours. I had to get a police escort to my bathroom.
So that was basically the scene. And then you had Elon Musk talking about this as an election issue, essentially, Rob, saying that this was government overreach. He came in here, and then it was meme coin was launched. Peanut the Squirrel was launched. Quickly topped a $100 million market cap. And I think, this was something that everyone was talking about. And I don't know what you learned from watching this all play out. But to me, it's kind of surprising to see it peter out. We're now under $50 million in terms of that token. There's so many angles to talk about with this one, Rob, but what did you make of seeing this play out, both from the election front, but then also from a meme coin front?
Yeah, so it's definitely a different, I think, conversation between the two of those things. On the election side, listen, I don't expect it to have any real effect on the election. I do think, based on what I know and what's been said, it does feel like, government overreach. Clearly there are laws around, what pets you can have and, if they need to be checked and, et cetera, et cetera. I don't know how a squirrel needed to have these officers come into this house and raid it. So from what I know, it feels very much like government overreach, from the New York government. But I don't know beyond what's been publicly reported. I think on the meme coin side, it's just indicative broadly of, what's been happening, right? Which is that the attention cycles are just getting a lot shorter and a lot quicker. And so every time you go on pump.fun right now, every single time that there is a news cycle, that there is something that, is tweeted by Elon Musk, there's something that, blows up on Twitter, every time there is a 50, 100 new of these tokens that are launched on pump.fun right away. They always, if they have, this ability to go viral, they always trade up by quite a bit. Now, whether that's 100 million or tens of millions or something, they're always trading up and then they always come right back down. And what we're seeing is that at this point in time, the meme coins are really just following a typical news cycle of, someone in Gen Z who doesn't really care about things beyond over, a day or two. And so we've seen these feedback cycles get a lot quicker. And this happened with even the AI cycle that happened basically the weekend before with Goat and Gonan and others. This is just an extension of that. It's really just about attention more than it is about anything to do financial.
Yeah, it is. And I think, trading these is an art and a skill, I suppose, in terms of knowing when to get out. It just no different than any other trading, though it is tied somewhat to traditional news cycles. Because yours
I might
truly.
disagree with that a little bit.
Would you?
But yeah, listen, I think you look at what's happening and you can look at like the on-chain flows. Like it is a lot of the most sophisticated on-chain traders who are launching these things, getting into them, getting out of them. If you look at the amount of what's happening like on retail and the amount of these tokens that get launched from Pump.Fun, and then how many of them reach a million market cap, how many reach them 100 million, it looks pretty bad from a retail investor perspective and a retail trader perspective, and it looks like honestly like worse odds than you would get at the casino. And so I think it is, and the data backs that up. And so I think if you want to talk about like who's really making money, it is some insiders and some really sophisticated on-chain trading shops who are the ones who are really focused on this. And then people get excited about it because of what's happening in the news, and they pile into it, and 99.9% of them lose money.
I will not disagree with you on that, because I did also lose money on these. And I think, again, it's one of those things where you make money until you lose money. And theoretically, if I had just stopped after the first time because we saw that big pump, if you were watching it play out, Elon's first tweet about this when it was first going viral seemed like, okay, this is going to continue to run higher. It did. And that was probably the best bet anyone could have made. And then you get addicted to it in terms of wanting to put more in, and then you lose there. And that's essentially what happens in a lot of these. So I would agree with you on that front. And also, you gotta weather the storm with the fact that was one chart that we just showed you, but there was a whole nother peanut token that came up not too long after that. Again, to your point, chart looks generally the same as you get a pop and then it slowly drains out. And if you came in after that pop, you're screwed there. But this is an entirely different peanut token. And to I guess both of our points is that, there's an infinite amount of these that can pop up. And unless they stay there for a long time, I guess the larger question here for you, Rob, is you've got Murad and other people out there talking about meme coins being the big thing in this next wave. If you got charts that look like that don't last longer than a day, I'm not sure that that's going to be true. And, I would say you might be the other side of the coin that Murad's been talking about in terms of, VCs versus retail and meme coins. I don't think we've had you on the show since he kind of went viral with his take. But what do you make of, I guess, that message to retail investors that, look, this is where you want to be versus all the other real projects that are building tech?
Yeah, listen, I think people should, put their money in things that they want to invest in, things they want to trade. Like, I have no issue morally or anything else with, meme coins. And I think, they can be fun, right? Like we talked about, this is the attention economy. Like some of them can be kind of fun memes. You want to talk to your friends about them in the group chats and, put your money into them and hopefully make a little bit of money, et cetera. But I think what history tells you about the casino and gambling, which is what this is when you look at the data, it's that there has to be at some point people making money to want to stay in the casino, right? If you continue to lose money and you continue to feel like you get rugged, or you think that insiders are making money instead of you, which is the current sentiment around VCs, you will eventually leave. And that is clearly what is happening right now in meme coins, even if people don't want to believe that, right? And so it's not, you're in, I'm in these group chats where these people who are very large traders, who are very large names on Twitter, are saying, oh yeah, I'm buying this, and that thing pumps. And then that person jumps out of it. And, the retail is just getting the idea that this is happening. And this is like absolutely part of the current kind of meta that is meme coins. I mean, so I think over time, like the interest is going to obviously wane, and hopefully we've all built enough goodwill around, the cool things that are being built in crypto more broadly, that people want to invest in the long term, and more liquidity and capital goes there. But, as people still think they can make money, they're still going to go to the casino, and meme coins are really just that in my mind. But I will say this, and sorry for that, but I think also like DJT is a meme coin. It's just in stocks. Right, like this is something that is permeating outside of crypto.
You're not wrong there. I mean, a gambler's going to gamble. They're going to find where to go. But I would echo what you said. I mean, listen, we've tried here at Coinage, and we are not holier than thou in any way, shape, or form in terms of looking at opportunities and not talking about them. For the last 3 or 4, in terms of meme coins that we've talked about on the show, they have not panned out well. And I live by it. I talk about it, and I live it myself. And they have not been good bets. And so I would not disagree with you on any one of those points. Even if you look at things that would have theoretically made sense with some pretty big influencers, they always dump. We saw that play out with Taylor Mathis and a coin that Ansem was talking about. We saw it across the board. It happens all the time. I'm losing money, and I would agree with you. It's not fun to lose money, so I'm not doing them anymore. But regardless, you did raise the point about liquidity, and I do think it's kind of a good way to connect the dots here, because so many people are talking about the dexes you can continue to trade these coins on. And it wasn't too long ago, Rob, that kind of the idea was get in early. I would think about Pepe as a meme coin that might be different than these. Get in early before the Coinbase or Binance listing and ride that wave. But when you got essentially a lifespan, as we just talked about with some of these meme coins, of one day, you're not sitting around waiting for that. And I don't think anyone's going to be talking about peanut post-election. So, when you talk about that, it was interesting over the weekend to look at a couple different things, including a tweet from Brian Armstrong that kind of went viral and got a bunch of attention from other people in the space, saying that there are no listing fees on Coinbase, which there were a few different builders who had something to say about that, including Justin Sun from Tron, as well as a couple other DeFi founders. You got the founder of Phantom also coming out and saying that, hey, maybe that's not so true, that they paid millions of dollars in terms of token listing fees for Coinbase. And I guess, Rob, the larger question there is just around the idea of decentralized exchanges versus centralized exchanges. Kind of that, I guess, I don't want to call it, token gating, but essentially gating of getting listed and the cost to do so, how much of these centralized exchanges are taking value or extracting value from projects. I mean, what do you think of the way that that's evolved since maybe just even 2 years ago, that maybe projects still do need to pay or don't pay, but how much it's evolved since then?
Yeah, so I think there's a couple threads to pull on here. First is just this idea of exchange listing fees, right? And Brian Armstrong saying that they don't have listing fees. That is true, and we see that across our portfolio and different types of projects that I'm close to. But what they do, which and I don't fault them for this, is they do things like they try to push the foundations of these projects to put some of their treasury, as much as 10%, into custody at Coinbase, which then Coinbase will charge you 10 to 20 bips on. So there is revenue obviously going to Coinbase for that. Or they'll do things like try to get you to sign up for their learn and earn program, which is basically you can do quests on the wallet to learn more about this token, and theoretically it's good marketing, right? And so they do these things where they definitely are trying to make money off of these listings. Theoretically, you can be listed, and I know projects have been listed without doing any of these things, and so that is free. But it's not so simple as to say, hey, listen, we don't monetize this. Now, like Binance, very explicitly, asks for 5 to 10 to 15% of the token of a project, which is just highway robbery. And frankly, the last few projects that have actually listed on Binance have done worse once being listed on Binance than they have when if they were just on dexes. So it's unclear to me and why people would pay that amount of money, and a lot of this goes back to leverage for the project itself. But Coinbase isn't completely I guess altruistic on this specific topic.
Well, I think that's kind of the point, I guess, right? Because obviously, like any other industry, it's not so great to have kind of only 1 or 2 power players that can kind of dictate what is going to be allowed as a project that's kind of, that has enough liquidity or listing or attention to kind of succeed. If you have only 2 companies, and I know there's more than that, but essentially if they're the largest ones in the game and you got to play by their rules or not, the idea of having decentralized exchanges are pretty exciting in terms of breaking up some of that power. At least that's kind of what I think a lot of people in crypto assume that we're here for. But I don't know if it's gotten any better in terms of not needing to go that route. And I think it is at least exciting to see another alternative, but I don't know from where you sit if you see any actual inroads being made in terms of projects that don't need to go that route at all. Because a lot of the ones I still look at, eventually you do need to get there just to, get the liquidity, get the investors, institutional investors especially. You kind of got to go that route. Yeah,
so that's still the case, and you're completely right. There's I think last month it was about 13-14% of all spot trading was done on dexes. And it's a much smaller number than that when you think about derivatives trading, which is much higher than just spot trading. And so when you think about it from that perspective, while those numbers are picking up, they're picking up slowly but surely. A lot of those numbers are actually related to things like meme coins, right? And very much like long tail assets. If you're a project that says, hey, listen, like, I have maybe venture capital backers, or I have a more institutional just needs and wants, and I want to reach those types of investors because I think this is a long-term game that has fundamental value, et cetera. The only way to reach those people today in mass is on a centralized exchange. And that's because, in many ways, that's because of what happened in FTX. So, it was always hard for institutional investors to be on chain. But after FTX, even though it was a centralized exchange, people got more concerned about just some of these regulatory concern issues, and especially because of the way the SEC has evolved since then. And they got more concerned about just like risk broadly and how easy it was to be on chain. And so they've been, more focused on, okay, well, I will only be on centralized exchanges, and I'll also only do tri-party custody, and et cetera, and I'll only be on certain exchanges. And so there's been a lot more, I think, pushback, or there hasn't been as much of an evolution into DeFi as you would have expected based on that, because it's actually these institutional investors have really just kind of pulled in, and they've really the amount of things that they're willing to trade on and things that they're willing to look at has really narrowed. And I think we need tooling around that, and we have a portfolio company called August Markets who is helping that and doing over $1 billion of monthly volume, but it's very nascent still today.
Yeah, I feel like a lot of that is, constantly being developed in terms of ways of helping, and still a long ways to go. But regardless, pretty interesting to see anytime, you've got Coinbase and Brian Armstrong coming out there and getting so-called challenged by other people in the industry. Finer points, I suppose, to dig into with that one. But Rob, I do want to get your take on one thing that we are looking ahead to. Of course, not just the election, not just the Fed decision, perhaps up there with the importance, I will say, in terms of Coinage naming a crypto project of the year. It's important for our community. It's important for people who watch the show. It was fun to do last year. We had Anatoly from Solana. We had John Wu from Avalanche. We had all the big founders coming on the show advocating for why their crypto project should be crowned by our community crypto project of the year. Doing the same thing this year. Got a bracket, but no names on there as we're waiting for nominations from people around crypto. And since you're on with us today, Rob, I'd offer you the same chance to nominate a project that you think stands alone in terms of their impact in 2024. And I think I have a clue as to which one you might nominate.
There is absolutely no doubt in my mind that the biggest impact on the entire crypto ecosystem this year has come from Polymarket. And I'll preface this with we're an investor, but if you look at just the way they've pervaded the national psyche around this election, I think it's unmatched in what has ever happened in consumer products and crypto. They're doing over $1 billion of volume last month. They have over 220,000 active traders. They're over 400 million of open interest right now. Like, that is a platform, and what Shane Copeland has done there in terms of just their integrations and their partnerships with all of the major media providers, all of the major data providers. I don't think there is anything that you could point to that has done more to bring crypto into the mainstream.
I think it's tough to argue against that, just because of how much we've seen it blow up in terms of not just for crypto people, but outside the crypto bubble as well. Yep. It's clearly crossed the chasm. And, I think it's obviously one that's not going away, no matter how much we've seen. Even Robinhood right now talking about doing the same thing. I think I got the email over the weekend. It's something that's happening.
Yeah, they finally launched it last week. Yeah.
Yeah, so it's really encouraging, I think, others to enter the prediction space as well. Perhaps a good note to end on here, Rob, when we talk about your prediction. I don't want to put you on the spot, but obviously everyone's watching this election play out. We opened with it. We talked about it from the jump in terms of where crypto goes, but any gut reaction to kind of how Dragonfly is thinking about things in terms of entering into, we are now here, finally, election day.
Yeah, so we're wait and see. I think our perspective is it's truly a toss-up. We don't know who's going to win. I think over the kind of medium to long term, I think we're all going in the same direction. It's up and to the right. I think any real dislocation around the election, we'd probably be opportunistic around that, because we have this long-term belief in what the space is doing, what the market's going to do.
I will echo that. I think it's a good reminder for people to end on here, as we talked about on the opening of the show. When you look at the charts, when you look at how fund flows are happening right now, I do think it's worth reiterating the same kind of quote here from Bernstein. It sounds like you and I are both on the same page when it comes to Bitcoin being out of the bottle. Genie's out of the bottle, so to speak. People know what it is. People know what's happening here. And regardless of who's in the White House, tough to put that genie back in the bottle. Rob Hadick from Dragonfly, appreciate you coming on as always. We got to get you a Coin and Chat. You're like 2 appearances away from getting it. We're so close there.
Next time I'll wear it. Yeah, just send it my way.
Always love having you on, man. We'll see what happens in the election. Thanks again for the thoughts, and thanks again to everybody for watching. We do this every Monday on Coinage, and you can check out all the big headlines from around Web3 at coinage.media per usual, and co-own us as the only decentralized Web3 outlet, along with the co-founder of Netflix and other builders in the space. For everybody here at Coinage and for Rob, thanks again for tuning in. We'll see you again soon.